Hello everyone, this is Jay and it's Friday, so I get to review my portfolios to see which stocks am I going to be buying today as a DCA investor. And I'm also going to take a look at Old Dominion, ticker symbol ODFL, mentioned by one of the subscribers in last week's video. So let's go right into my portfolio. Let's go a little bit to the right to see how my stocks or my holdings are performing. And as you can see, I am in the positive by 3% in this portfolio. But All Realty Income is one stock that is right now in the negative at 7.5%. But they have increased their dividend one more time, very, very little by point something cents. But it still add up. Right now it is a 0.263 cents per share per month. So that's really, really nice. And I'm going to continue to build that position as of right now. I'm going to try to focus a little bit more on that one, on Old Realty Income. But another one in the real estate that I want to buy more this week, and this one is going to be my focus this week, is going to be VICI, which is this one right here. I'm at 13.9 shares right now. I'm in the negative by 5%. But if we go into the stock analysis tab, they're going to go ex-dividend date on Tuesday. So I want to buy a little bit more on this one, on VICI. They have a 5.87% yield right now. The annual dividend is $1.66 per share per year, which equals to 41.5 cents per share per quarter. Their dividend growth 6.41% in the last year. So I want some more of that dividend growth for the next quarter, because we are due an increase in the dividend in the next quarter. They usually increase it every September, as you can see right here. September 2022, they went from 36 cents to 39 cents. Then in September of 2023, they went from 39 cents to 41.5 cents, which is what they're paying right now. And I want to get a little bit more in the next quarter, but for this quarter, which they pay in July 3rd, we're still going to get that 41.5 cents. And I want to get a little bit more of those 41.5 cents, right? Because every cent counts. This company, I want to hold it long term. So it is one that I want to continue to grow, and I want to get a very, very nice dividend. Especially VICI is one real estate company that I'm going to keep next to Realty Income. And as you can see, if we go into the overview very quick, market cap for this company, $29.5 billion. And let's see their performance. So in the last month, it is down 5%. Year to date is down 11% in share price. So I like it every time that is under $30. And right now it is at $28.29. And then if we open the last year, down almost 13%. And then if we open in the last 5 years, it is up a nice 27% in share price. So that's really, really nice. But I'm going to be collecting those dividends. That's what I'm really focused about in this real estate company. Oh, and look at this. In 2020, it was around $13 a share. That would have been nice to pick up some shares back then. It would have been really, really nice with a really nice yield as of right now. But yeah, VICI is gonna be my main focus this week. And let me know in the comment section, which stocks are you buying today, and are you a VICI shareholder? Is this one company that you like or you're looking into? I can do maybe a little bit more of a research for you if you would like. But it's one that I really like in the real estate sector. And then, of course, VICI is going to be another one that I'm going to be buying today. Gotta continue building this position. My goal for this year is going to be 4 shares, which is over $1,000 invested in this company. And that's really going to be one of my main focuses. I really want to buy VICI, and I want to build this position. VICI, I'm thinking about it 20 years at least. I'm going to be holding VICI. And hopefully, if it continues to be a great business as it is, continue to have the revenue growth, the free cash flow grow. Their earnings are just very flawless every time. So VICI is one that I'm planning on holding long term. I want to retire with it, pretty much. So it's one that I want to continue growing this position, and I want to continue buying every week. And of course, Johnson & Johnson and Starbucks have been the topic for the last couple of weeks, and I'm going to be buying more today. I have to. Right now, Starbucks 7.1 shares. I'm in the negative by 5%, but it's recovering. The price is recovering. Right now, it's at $80.24, and my cost per share, I was able to bring it down to $84.63. So I've been bringing down my cost very nicely, and I want to buy a little bit more Starbucks. And then Johnson & Johnson is still in the 140s right now, so I need to buy some more. I'm in the negative by 7%, and yes, I should be panicking, but no, I'm okay. I want to continue to build these positions right here because I'm planning on holding long term. And are you buying? Are you still buying Starbucks? I know Jeremy's still buying. Vested Interest is still buying. I see a couple of subscribers that are buying, a couple of channels that I follow that are buying. So it is really, really nice. And the other one that I really wanted to talk about, maybe I'll talk about it in the next video, is going to be Apple. I'm up right now 50%. Very, very nice position right here. And I've been contemplating or thinking about selling this position, which is at $214 a share as of right now. My cost per share $142. I bought when it was in a dip around $125, 130, and then I did a challenge with Jeremy and bought like around 180, and it seemed expensive when I was buying it at 180, at $180 per share. But right now it's looking cheap. it looks like my buys are now cheap, right? You know, at $180. Everybody wishes they could buy it at 180, but that's how the stock market is. It goes up, it goes down, but a lot of great companies like Apple just continue to go up and up and up in price year over year. So it's one that I might talk a little bit about it, but 50% in like a 2 year. I think I've been holding this stock for like 2 years. So that's a really, really nice return as of right now. And the last one that I really wanted to talk about before I go to Old Dominion, it was Kenvue. I really want to grow this position. Right now it's at $18 a share. I'm in the negative by 18%, but it's another one that I'm planning on holding long term. I'm thinking future. And I need to build this position. So I'm going to see how I can split the deposit that I made today. I'm going to be spending only around $100 between my holdings. So I'm going to see how I can divide it into all of these positions right here. And then maybe Pfizer will get a little bit of love, maybe a cup of coffee. But the other companies are going to be my priority for this week. Which is going to be VICI, Starbucks, Johnson & Johnson, and Visa. Those positions and all Realty Income are going to be some of my focus for this week. Let me know. Please don't forget to hit the like button, subscribe to the channel, which is almost at 800 subscribers. I'm really excited. I'm hoping I hit 800 subscribers so I can talk about it in the next video on Sunday. Really appreciate everyone's support. But let's go right into Old Dominion, which is ticker symbol ODFL. And let's take a quick look at it right now. Share price right now is at $172.91. It is down after hours or pre-market pretty much at $169 per share. So it's down 2%. Market cap for this company, $37.5 billion. PE ratio as of right now, 30.44. So this is at a nice premium as of right now. Earnings per share, $5.68. The forward PE 26.60. That dividend 0.6%. So it's $1.04 per share per year, pretty much. Ex-dividend date, they just went ex-dividend date in June 5th. So it would have been nice to collect a little bit of a dividend. The analysts are calling this a hold. As of right now, the beta is 1.03. So let's go and see the performance in the past couple of days. In the past 5 days, it is up 2.82%, but it looks like it's going to go back down into where it was at 5 days ago because it's already, pre-market is already down 2.26%. And then let's go in the last month, it is down 6.21%. So it looks like it's trending down a little bit. In the year to date, it is down 14%. So it took a big dip right here. And then in the last year, it is up only 10%. As you can see, it went up very nicely. It was in the $160 range about a year ago, and then now it is in the $172 range per share, but it went up as high as $223. So that would have been some nice gains right there. In the last 5 years, up 292%. Very, very nice. That's some very, very nice gains. And let's go to the financials very quickly. Let's see if, and it's not letting me pull up the chart, as you can see right there. But the revenue, it looks like it was growing from $4 billion in 2020 to $6.2 billion in 2022. But then it went down in 2023 to $5.8 billion. So the revenue is going down in the last year. And let's take a look at the shares outstanding. Let's see if they are diluting the shareholder, but it is not working, the chart. So it's going to go from 2020, right? From 2020 to 335 million shares to 231. They've been buying back some shares, so that's really nice. They're not diluting the shareholder from 235 million shares in 2020 to 219 million shares in 2023. So that's really, really nice. Their earnings per share has been positive from 2.85 in 2020 to $4.47 to $6.13 in 2022 to $5.67. So the earnings per share is growing really nice. And their free cash flow, it looks like it is also growing from $711 million in 2020 to $938 million in 2022 to $860 million in 2023. So this one, it looks like it's growing very, very nicely. Let's take a quick look at the balance sheet, at the total debt. And as you can see, they go from $99 million in 2020 to $79 million in 2023. So they're also paying off their debt, which is really nice. And they have more cash than debt. So that's really, really nice too. I got to do a little bit more research into this company. But the numbers look pretty good, even though the revenue is going down a little bit. I know that we use at my company, not at my company, where I work at during the week, we use Old Dominion, and it has always been very good. We never have any issues with them, with any of our orders or anything like that. So, which is really, really good. They are professional also. And as you can see right here, their payout ratio is only 18%. That's all they use from their cash flow to pay out this dividend, which is really, really nice. Look at this dividend growth, 31%. Wow, very nice. If you see year over year, they were paying 7.5 cents in 2020. Then they went up to 10 cents per share per quarter in 2021. Then 15 cents per share per quarter in 2022, then 20 cents. Wow, nice, very nice jump in 2023, and then in 2024, 26 cents per share per quarter. I really like a lot of the numbers that I'm seeing with this company. Leave me your opinion in the comment section. Do you hold Old Dominion? It was mentioned by one of the subscribers, and I'm sorry I did not look at your name before I started this video. Which was my bad, but it is a very nice call out. I kind of like this company. I like what I see, especially truck freight is very, 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 very much needed for the goods. I don't think that's going to be something that is going to go away for the next 50 years or so. I think these companies are going to always be out there. Especially Old Dominion is also a LTL, so they take less than a truckload in orders, because we pretty much, where I work at, we send like a couple pallets of orders. We don't sell that much. We don't send that much with them, and they just take, a couple pallets of orders from this company, then a couple pallets from the other one, and then they just go deliver it to the state where they're gonna go, or to the states that they're gonna go. which is a good company actually, and it was a very good call out. So thank you so much for sharing it in the comment section. I think I'm gonna add it into my watch list. Are you guys adding it too? Do you guys hold this position? Please leave me in the comment section. I really would like to know. Old Dominion Freight Line, ticker symbol ODFL. All right, everyone. Please don't forget to subscribe. Hit the like button. I really appreciate everyone's support. That really helps the channel to continue to grow just by hitting the like button in the video. And I'm still working on the computer, so hopefully that will be here soon with a nice camera and a new microphone. Hopefully in the next couple of months. I'm really working hard towards that. All right, everyone. I hope you enjoyed this one, and I'll see you in the next one. Thank you. Disclaimer, I'm not a financial advisor, and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.